Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati. And RBI governor has said that they will do what they can to make sure that the rupee is not falling fast and that they are even willing to spend a large portion of the foreign exchange reserves to protect the rupee. But the question is, will the RBI be ever able to protect the rupee? And just before we go on, do not forget to download our app Quick Invest by INR Bonds, where you get the best bonds curated for you to invest in such volatile markets where everything is uncertain. And investors get the best bonds with the most transparency, our own proprietary risk score, and an easy in-app investment process, makes it very simple for investors to invest in bonds or for financial advisors to recommend bonds to their clients.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR bonds. Download the INR bonds app to save better.
Back to bond bites. In the market highlights today, the government bond yields were down. Sensex and Nifty were also down. INR was also stronger. On RBI's words, the US Treasury yields fell sharply up to 2.77% on recession fears. And TVS Credit Services, the subsidiary of Chennai-based TVS Motors, is to issue 6-year bonds at 9.5%. TVS Credit Services has been seeing some good amount of investor interest at the retail level at around 8.5 to 9.5%, depending on the maturity of the bond. Now, coming down to RBI, will RBI be able to protect the rupee? Very difficult, because when there are capital outflows and there's risk aversion, the tendency is for the rupee to go down, and most of the market will start shorting if RBI continues to sell dollars. And when they do that, then RBI will not have enough reserves. And over and again, it's proved that winding down forex reserves to protect the currency, as seen by all other Asian and emerging countries who have attempted to do so, has proven to be a disaster. And do not forget to attend our webinar on 27th of July, 4 p.m. Wednesday, where I will take you to what bonds to avoid in this market, given that so much of volatility, rupee depreciation, recession fears, rate hikes, and inflation. All this are making bonds riskier, and it's very important to know which bond to invest in and which bond not to invest in this market, as also the best bonds to invest in with the adequate returns on a risk-adjusted basis. Thank you for listening in, and don't forget to subscribe to our YouTube channel if you've not done so already.